Alright, welcome back, motherfuckers. We're back with another ICT concept video, okay? Today we're going to be covering, well, I wouldn't actually say, hold on, let me retrace. I wouldn't say this is necessarily an ICT concept. I would say this is more just a general concept. Maybe it is, maybe it isn't, but it's really only mainly found in the ICT space. But anyways, we're going to be covering over liquidity, okay? Sorry if I look a little rough. It's been a rough day. Terrible allergies and probably getting a little bit sick, but that's okay. Still here doing this for all of you. Um, trying to push this stuff out for you guys, even if there's only 5 people watching. I might as well give those 5 people some value. So, liquidity. What is liquidity? So, liquidity is where there are forms of resting orders, either on buy side or sell side of the curve, right? Liquidity can be previous high time frame swings, swing lows, and swing highs, which I'll get into in a minute. One of the things I always tell people is that there's one of the main reasons that the markets move are to hunt liquidity. You will see in a lot of my videos covering how I trade is markets move to hunt liquidity and rebalance inefficiencies, okay? And if you're wondering what I mean by rebalance inefficiencies, then take a few steps back, go watch my fair value gap video. That'll explain what I mean. But yeah, so I'm going to show you how can we use liquidity in trading. Okay, so a good simple way to use liquidity is it shows you what direction the market is going to go for the most part. And what I mean by for the most part is you're not always going to have the market go in that direction based on certain things. For example, I don't know, news, FOMC, Powell trading or Powell speaking, NFP. GDP, any of those things that are going to heavily affect the market. You don't even want to be trading those days, but you also don't want to be what's it called? You don't want to be looking for liquidity in those zones because it kind of just does whatever it wants to. It doesn't necessarily follow the algorithm exactly, which is okay. That just happens. So liquidity are great zones to be able to trade off of, as well as they are really great if you use them to target your take profit points. And what I mean by target your take profit points is when you have your take profit points, obviously that's where you want to take profit. Using liquidity can be a good zone to show you where you want to take those profits, right? Because if you don't have a stop loss and you don't have a take profit, you shouldn't even be trading. If you don't even have a trading plan, you shouldn't even be opening fucking TradingView, okay, at all, which is why I'm making these videos for you guys, is to show you what I used to trade, right, and what keeps me profitable on a consistent basis, okay. Besides last week, we're gonna scratch that because last week was not great. Bit of a red week, which is okay. We'll come back from it this week. Tomorrow is May, so we're going to start it off strong, right? We're going to start it off strong. I think there's FOMC tomorrow. Can't remember. I'll look at this after I make the video. But yeah, so let's get into some examples of liquidity, okay? So this is liquidity, internal liquidity on a 15-minute time frame. And what I mean by internal liquidity, right, is internal liquidity is the smaller time frame liquidity, okay? So, for example, you have this swing high of the aftermarket session, and then you have this swing low of the aftermarket sessions, which would be my liquidity zones where I want to target, right? So as you can see, I didn't trade this. This was actually this morning. This is a perfect example of liquidity. So I didn't trade it this morning. There was slight news, I think, in the pre-market session. I can't remember, or maybe right as market open, which did cause pretty hefty movement to the downside and to break all this liquidity down here. But, for instance, what I would be looking for in my usual trade was I would be looking for things of this manner, which would be liquidity coming. So we have our sell side liquidity. I would look for sell side. I would look for accumulation, maybe another move, and then I would look for moves to take out that buy side zone. That's just kind of what I like to look for. Those are the things that I see when I trade, and I just screwed that up. Those are the things I look for when I trade. So that's an example of internal liquidity. Now let's look at a example of external liquidity. Okay, so this is on a 4-hour time frame. This would be external liquidity that price is going to draw to. So you see we have this right here created a 4-hour liquidity zone, sell side liquidity zone. Okay, because we haven't rebalanced to it yet. Now, if you look here, we have our swing high, boom, our swing low, boom, doesn't go below this previous swing low, boom. So I'm expecting, possible higher markets tomorrow, but then up here we have our buy side liquidity zone, right? Buy side liquidity right here. These swing highs, this would also be a liquidity zone right here. This up here would also be a liquidity zone, and you could also say this swing high at the bottom right there would also be a liquidity zone. And I will go over market maker buy and market maker sell models, and we'll also cover a little bit more liquidity in that as well. I'm thinking about making that video possibly either tonight or sometime in this week for sure. Because I really want to cover that to kind of give you, because it kind of puts everything together on the charts. It really puts, and it puts everything together, so it all works out really well with each other. I would advise you to pair liquidity with a bunch of other things, right? So if we go over here, right, you can see that one, we have, liquidity, obviously, sell side taken. One of the things you can look for is what happened here, right? This place. Normally, this is what I would look for, like I showed you earlier. I'm going to show you again right now. This is what I'm looking for. I'm looking for this, possibly this, back down, and then I'm looking for this, okay, right, up, take out, buy side. But where I want to be entering would be somewhere in a fair value gap range, right? That's what I would be looking for, is a fair value gap range. Something that, I can get a good entry off of, and boom, that's it, I'm in. And then, you can maybe add some positions right here if it falls into another fair value gap, or, something along those lines. But there's a lot of different things you can do. Also pairing market structure shifts as well, which was my last video of ICT Concepts, is a really, really great one. Market structure shifts are very, very helpful in another way to see in what direction the market is actually going to go, whether it's going to go in, one direction or the other. But yeah, so with that covers up our liquidity video. Pretty short video, but I'm more making these videos so they're not super long. I don't want to sit here for an hour and ramble on. I want to give you guys, the straight up information, so you can always come back to these, and I will link this board down in the description below for you. And yeah, so with that, I think that's a pretty good spot to end it. Just want to give you the basics so you can start looking at it and refer to this and understand it and see it in your chart as well, because once you see it once, you'll never unsee it. And then when you start to see it again and again and again, it literally just becomes imprinted in your brain, which is okay, which is a good thing. But yeah, so with that, I think I'm going to end it there. I hope everyone has a wonderful rest of their evening. Hope everyone had a great trading day today, and I will see you all tomorrow. Peace.